Sumitra. I'm a full-time trader and a SEBI registered research analyst. And today I would like to briefly outline the process that I use to evaluate a portfolio. So my company tends to receive requests from clients to evaluate their current portfolio and to see if we can make some changes in order to maximize risk-adjusted gains. Before I begin in the analysis of one of the sample portfolios, I would like to say that while developing a portfolio, there is no absolute right or wrong. There are just broader strategies which a specific trader or a trading firm may be more comfortable with incorporating. So, for example, as most of you already know, that I trade breakouts and I trade well-established trends. So, this here is a chart of gold on the weekly against the Indian rupee, and we can see that the high of 2013 was completely taken off, and we are seeing upward moving averages, higher top, higher bottom formation, clearly bullish trending security, and we excel particularly in trading these types of setups. It is not to say, for example, if I replace this chart with something like this one, uh, now this here is the Nifty Metal Index. So it is not to say now here we can obviously see that this is a ranging chart. There is no ambiguity about it. This has a very broad range between say 1600 and 3800, so offering up to 150% returns on a good year if the bottom is picked up. But we so it is perfectly fine to trade ranges, but if given the choice, for the purpose of building portfolios, we avoid taking up secure positions in a ranging chart, and consequently if we see anything of this kind, we tend to slash it or give it a negative rating. So with this understanding, let us just quickly move on to what we have in terms of our holdings. Here we have in column A the name of the security, column B is the quantity, the price at which it is procured, the valuation, and thereafter, after making some edits to the Excel that was sent, I have added the weights. So we can now see that a total for the portfolio of 1.8 CR, we have roughly 85 stocks constituting various percentages. Now, the idea for us is to assign a verdict to a particular stock, and the product of that number with the weightage will give us the portfolio score, which means that let's assume that if the entire portfolio has a verdict of -10, then -10 into 100% is -10. Likewise, if the entire portfolio has a verdict of +10, then +10 into 100% is equal to 10, and therefore your portfolio score is likely to range between -10 to +10. And the question here for us is, what is the score of this particular portfolio? So since we have 85 stocks, a lot of it is there. We will just quickly rush through the process, which is very simple and something that you can use in your own portfolio planning, and complement it with your own skill sets. So before I begin, for me, given that I actively trade, for me, I already know that securities like Yes Bank, Vodafone Idea, etc., are all going to come into -10. There is no doubt about it. So I'll just show you why. So this is Yes Bank. Okay. This is as ugly a chart as it can get, and there is no way that a serious investor looking to build long-term wealth will want to hold on to this particular security. There are various possibilities of events to happen, various things that can happen, but we as a trading firm absolutely discourage people taking up positions, such deep value bet positions, without having a very strong assessment of a company's fundamental. So a chart that looks like this is a big no-no for us. So Yes Bank is a -10. Similarly, we will see that for Vodafone Idea. This one too is a -10. Okay, one could argue that it is turning around and things are looking better, but I mean, we simply as an organization, we don't play a revival story. We play, what we want is, we know that we have finite money there are almost infinite securities, so we want to be in the best security that is there for us to take our positions in. So anyways, so Vodafone Idea is a -10, Reliance Industries is a +10. It's the exact opposite of Vodafone Idea. What +10 would basically means is that we want to aggressively accumulate into the stock whenever we get an opportunity. So given that we see the 50-week moving average at 1600, there is no doubt that we are holding on to this stock for a long time, and irrespective. So the client's buying price is 1285, which means that the purchase was made somewhere around here. It's quite okay. So I mean, this is a trade that's almost certainly in profit, and the idea here is for us to build up more positions on Reliance Industries, and like any trend trade, we want to wait for a pullback. Loris Labs is another +10. So I'll just show you the chart here. It's a beautiful chart. Uh, right here. It's a clear breakout on multi-level highs. This is a company that has, after the hype of the IPO, has completely lived up to its expectations after a turnaround in management. So we want this as a +10. Manapuram Finance is a very tough one to pick, but I think I'll give it a 5. Yeah, no, so by and large, this is a kind of a chart structure that I would give as a very weak bullish structure, which means that it is capable of extremely deep pullbacks, slowing down the rate of growth that we could expect from a company. So in this case, basically, we believe that Manappuram can be bought at 80 and should be generally sold at 160. We have the client who has bought it at 160, so there is no doubt that we want to exit this stock. And I think this does not form the part of we don't want a ranging stock in our portfolio. We want clearly trending stocks in our portfolio. SBI Cards is a new stock. We means it's an IPO, but so we just have to see. Okay, so I've not analyzed this, but given that it has created a new high, all-time high, it looks fairly bullish, but I do not have any idea because there is obviously not enough information on this. So I'll just mark this as a neutral, that is, we don't have a position on this at all. This Monet Ispat and things like that look like a sell to me by name. So I'll just check. Monet Ispat, right? Yeah, it's a sell. So Sale, Tata Steel, Nalco, Moil, NMDC, all of that is garbage. None of that should be a part of your portfolio. So it's a -10. Uh, Future Retail. So this one has been in news, but I feel that it is Future Retail. So this one has been in news because of its acquisition of Reliance. So let's see how it has done. It has done extremely poorly, -10. Now, one could argue that the client has bought it at 100. It is right around here. It's no big deal. But why even have this stock in your portfolio? It just does not belong there. Dixon is a +10. There's no doubt. Indian hotels can be exited completely. It's a -10 again. It's a ranging security. So it's not a -10. It's definitely a -5. I mean, we don't want this kind of a setup in our chart, actually. EIH. Um, I do not know which one it is. I think it's this one. EIH Limited. Oh, yeah. This is more like, I mean, we just don't want this, so I'll give it another -5. -5 because it's ranging, and when it's ranging, there is always a possibility of it coming and testing its previous highs. So, which means that, so say for example, I were to take a structure like this, we clearly see that this is the region to sell this. So there is always a possibility for it to reach there, and we also see that this generally has been the region to buy. So so like I said, but this is I mean, this is very consistent with what we see in the metal index in general. It's a cyclical range bound index. So so but why not have a trending securities, our argument? So we just exit this. SpiceJet is obviously a sell. I mean, it's something that we don't want in our portfolio for sure. It's another horribly looking ranging chart. So means it has the possibility of a bounce back, but okay, it's an exit. Max Healthcare. Okay, no information, so we'll just leave it at that. Rail Vikas. Again, insufficient information, so we'll leave it at that. HDFC Bank. Okay, this one is a really tricky one. This one, in general, historically has been an uptrending security, but what we are seeing here is that after this higher top, we are seeing a low bottom, and it's really a question of whether or not this is going to be a lower top. It's a security that is going to range. Very likely, it is going to range. It's difficult for the security to take out its all-time high as of now. We do see a W pattern that is formed here, so which means that the 1050 levels should be a reasonable support for this place, for the security. But this is not why I wanted. We are seeing too many bearishes. This is an evening star right here, another evening star right here. So we're seeing too many reversal signs at 1150, 1130 levels. There's no reason to have this stock in your portfolio. As good as this company has been historically, I think this is a time when we have to leave this particular security because of several reasons. One of them is the extent of the pullback and the failure to take out the all-time high, given that we already have a lot of stocks which have been taking out all-time highs. So I would exit HDFC Bank, and I think the most suitable rating for this could be another -5 because of a potential. Maybe -5 is too strict. Maybe I could give it a -2 because it doesn't have too much of a downside. It's 15% downside, but we don't want to see it actually. So, but it's still an exit. GMM Frouder has been in the news because of an offer for sale by one of its investors. It's definitely a strong. It's not a bad company for sure. It's been in trouble of late, and it is something that we definitely want to have in our portfolio. So I'll be giving this a 10. Mm. Yeah, emphasis. Uh, I had checked this stock some time back. I never really liked it, if I remember. Um, okay, now I like it. Emphasis has given an all-time high break, so it is something that we should consider in our portfolio. The risk, of course, is that it reverts back to a range, but it is a plus. It's something that has to be considered. It has to be considered for your portfolio. Bharti Airtel is a minus. I think it will be a -5. I've seen this several times. I've not objectively seen it on a weekly chart, but what we actually have here is Bharti Airtel taking out a 2007 high and then getting rejected, which is what we are particularly concerned about. Say, for example, Emphasis. So it's the same thing. Bharti Airtel, we can see here, has taken off this high and only to go and get rejected. Now it's completely fine for Bharti Airtel to come anywhere to get rejected. It's something. It's a potential breakout, not breakout kind of a stock, but whatever. Given the extent of the fall, it's very. I think right about here it's almost testing our exit. If not already testing our exit, I think Bharti Airtel should be exited for now. It's a strong stock with not a deep bottom, but it not a lot left in terms of. So I think, yeah. So while making this, I was just wondering if I made some mistake. Emphasis at the 7 is definitely worth considering. Bharti Airtel seems to be like a case of 7 that has gone wrong. So I think -5 is a little bit too strict for Bharti Airtel. Maybe -3 is more like it. Next one is Polymedicure. It's Polymedicure right here. Definitely 10. It's a no-brainer. Uh, Lemon Tree Hotel, I think these hotels are not really required in anyone's portfolio unless there is something seriously magical happening. So this confirms it. So it's a -10. should not be there in a portfolio. Reliance, this naval engineering thing also is not something that should be there in a portfolio. No, naval engineering. Yeah, so it's right here. This should not be in a portfolio. Uh, Alkala Mines, I think this was in the news recently. Um, it's all been spiking because of the recent curbs on Chinese imports. The chemical and the pharma and the API industry is absolutely blasted. And this is such a beautiful chart. I mean, it's just wonderful to be able to have a position on this. One needs to have this. Suzlon, I'm not even going to bother. It's a minus 10. India Mart Intermesh is a plus 10. Sterlite Tech, I think this is an exit, if I remember correctly. Uh, it's definitely an exit, yeah. So it's a minus 10. We don't want this in our portfolio. Mastec, I think, was in the news, and it should be a strong stock, if I remember. Yeah, so it's a plus. It's a clear cut breakout. It's definitely something that we want to try. I think it's a 10. Uh, and now with this. Okay, there are quite a few stocks, so we'll just stop at this one. I think we'll stop at Godrej Properties. Shobha and Godrej Properties both need to exit. I'll just check once on CSB Bank, uh, because I mean it's a good thing. So CSB Bank, we don't have much information, so I'll just but it's ranging, so I don't want to take a chance. I'll leave this one. I think Shobha and Godrej both are an exit. Means the real estate market is not really required for us, and I think this is Godrej Consumer Products, Godrej Properties. Hmm. UDR. Okay. Yeah, it's minus 5. All right. So with this, basically, I have completed roughly an assessment of 30 odd stocks. I don't know how long are we into this particular video, but I think it's long enough for you to get an idea of how we are taking what is known as a gestalt decision making. We are not really getting deep into a particular chart because we are not interested in taking the trade. We are just interested in knowing whether or not this chart even belongs to the portfolio. So with that, I think we will stop this, and maybe we'll continue this some other time with some other portfolio. Have a good weekend, good Friday, and cheers, have fun.